Hello and welcome to the Global Dialogue with Jonathan Schiessl on Investonomics, an initiative by ICICI Securities. Thank you, Jonathan, for joining us on the show today. Jonathan, I want to start by talking about the Indian markets, which have done very well for themselves this year. And if I look at the emerging market basket, we are the second best performing market this year after the UAE. Are the Indian markets looking stretched, or is this beginning of a long-term trend?
Yeah, I think, when you've looked at India versus other emerging markets, India has traditionally, when you say stretched, I assuming you're referring to two things. Firstly, how well the market's done, and secondly, valuations.
Mm-hmm.
So I think traditionally India has traded from a valuation perspective, quite substantially more expensive than markets like in China, for example. And there's good reasons for that, and we can touch on that a bit later. So India, it's nothing unusual that India is more expensive. We've seen that for long periods in the past. However, I do think when you look at where the index level is compared to other emerging markets, certainly India, it looks to be pricing in a full recovery from the whole COVID mess, even though obviously it's still ongoing. And the market, is certainly pricing in a recovery in corporate earnings and a pretty rosy future. So I think perhaps the market's got a little bit ahead of itself just in the short term.
Mm-hmm.
But if you look, as investors should do, slightly longer term, then I think India does have the advantage of some fantastic companies and a great long-term growth story.
Jonathan, two sides of the coin. On one hand, the China plus one strategy has been playing out for quite some time now in the last few years. Of course, the slew of news recently about the crackdowns in China makes India, I would imagine, a little more attractive to FIs. And of course, let's not forget that the unpredictability of Chinese measures has only benefited Indian equity markets. Will that continue to garner support for India on one hand? And on the flip, though, when you look at some of those FI numbers, inflows have actually been slowing down in the last few months, not just internationally, but locally as well. So how is that equation really going to play out?
So I would definitely agree with you. I think the issues in China, for some time, quite frankly, have anybody who's looking at Chinese stocks and markets, you've always had to have an element of pricing in the risk from uncertainty around stable government policy. And again, when you're looking at individual companies and sectors, you've also always had to have in the back of your mind, what is the government's policy on this sector, and what is the risk of a sudden and abrupt change in policy. So the China side is, from that perspective, is very difficult. And when you look at China vis-a-vis India, from that perspective, then certainly India stacks up better. There are obviously certain elements of policy uncertainty from time to time in India as well. And certainly for foreign corporations, for example, we've had for some time some tax issues in India, which, to be fair, finally looks like they're being resolved. So yes, India stacks up very well compared to China on those metrics. And I think, you mentioned the crackdown and particularly the crackdown on the IT sector and these e-commerce type companies. And I think the interesting point being, again, when you compared India and China, one of the frustrations for foreign investors and investors generally in particular with India was there was so little or so few companies to play in that sector within the Indian market, whereas you had a lot more to play within the Chinese market. But I would say that's now starting to be addressed with more listings that we're more recently seeing in India, and now there's a bit more choice. So that again stacks up quite well for India.
Right. Adding to some more to the potential risk rather, for Indian markets, are you worried that rising inflation will result in a rise in interest rates, or earnings may not be as rosy as what was estimated? Fitch has also, remember, downgraded Indian GDP forecast to 10%. And we are also in the midst of the earnings season right now. So how are you viewing the whole pack?
Yeah, so inflation is obviously something from an Indian perspective is something that we've had to deal with for many decades. India is an economy that has had an inflation issue. Yes, you could argue over the last few years that has come under control with obviously the new policies in place. So it's got better. But obviously, globally, there is this massive debate going on at the moment. Inflation is rising everywhere. Obviously, central banks globally are blaming it on what they call transitory factors, temporary factors, due to supply chain constraints, et cetera, caused by COVID. And so I think the RBI is no different from other central banks around the world who is claiming that the rise in inflation that we're seeing is a more temporary factor and that inflation will settle back down to more pre-COVID crisis sort of levels. So I think that is a big debate going on. I think for the time being, it looks like the argument of central banks is being listened to, certainly globally. If you look at bond yields, what's happened there. But I think, it is a difficult point. And the problem, and particularly from an Indian perspective, if inflation expectations of the general population it starts to get entrenched that these rapidly rising prices are here to stay, then actually inflation could become more of an issue. But certainly, on the inflation side, I think on balance, I'm probably personally thinking that it will ease off. But there are other areas, not everywhere, but certainly at a headline level. But there's certainly areas where probably it will remain a bit sticky. And it's a very, very difficult point we're at the moment. And yes, it looks like central banks have got it right, but we'll see. I don't think the battle's quite over yet.
What about the earnings season, Jonathan? Are you pleased with what you're seeing this quarter?
Yeah, so I think again it's very difficult. Yes, on the headlines look very good from an earnings perspective, but there's so many funnies, to use that awful expression, within earnings, because obviously when you're comparing quarter on quarter or year on year figures, again the whole mess that's COVID has complicated. It's not the picture, so it's not a clean sort of comparative picture. That said, I think clearly Indian corporates have come through this pretty well, this whole COVID issue, and with the rebound that we're seeing in the economy, with I think the realization that life's got to go on, you can't keep locking down the place. So I think corporates themselves are probably getting more confident about investment, and therefore, yeah, the earnings season looks pretty good, and ultimately, I think things. I guess the one short-term issue for a lot of companies out there is input price pressure.
Mm-hmm.
So rising commodity prices, rising energy prices, and rising prices across the board, which has had a bit of a margin hit in certain sectors. But if that normalizes, then I think the outlook's pretty rosy.
I want to pick up on that point that you mentioned about the commodity prices. How are you viewing sectors that are commodity plays? So not inputs really, but like the metal sector, right? Do you anticipate the commodity super cycle is here to stay? How would you play metals right now? Would you continue to remain long because they've ran up substantially already?
Yeah, no, you're quite right. A lot of those commodity related sectors have had huge rallies. Yes, I think very recently some of the areas across the globe have seen a bit of a sell-off as some profit takings coming in. I'm not sure, we can definitively say we're in a new commodity super cycle just yet. I think clearly the whole commodity space got crushed in the first COVID wave, including oil and energy. We saw that extraordinary period where oil went below zero very briefly. And clearly then we've seen as economies opened up, we've seen demand pick up, and obviously we've seen some labor issues in certain commodity companies and sectors, which has resulted in spikes in prices. Now, some of that has corrected itself. I'm sure you're aware that, for example, if you looked at the US, building material sectors there. You saw lumber prices, and obviously a lot of US houses are primarily wooden constructed. And you saw lumber prices going through the roof, basically, early on in the crisis, or just as it was starting to come through. But those now have corrected a huge amount, those prices. So a lot of the gains have come back in certain pockets. But I think it's interesting to note, following, for example, the passing of President Biden's infrastructure plan, I think you're also seeing in a number of other developed countries a big push on infrastructure and spending. So I think there will be underlying decent demand for a lot of the commodities. I wouldn't say we're in the midst of a new commodity super cycle just yet. I think it's probably too early to confirm that. But I think, it's interesting. Certain commodities do look very good. If you look, for example, at copper, copper is probably the prime beneficiary of this whole shift in the world economy to e-commerce, etc., etc. So certain commodities do look good, and other commodities, are still a bit clouded. If you look at the whole issue with coal and some of these other more so-called dirty commodities, then probably, and even oil, the usage of those probably on a medium to longer term is going down, and therefore the outlook looks clouded there. So it's a very mixed picture, and any investor looking at the commodity space, I think you need to try and do your work on each individual one. But there are a volatile space, so it's an interesting sector, but one that you need to, there is some risk in the sector.
Right. Let's talk a little bit more about input costs and input worries, right? Automakers across the world have cut down production, vehicle production, because of the acute shortage we've seen in semiconductors. That we believe is also going to derail or delay the recovery that the auto sector is hoping for, given that most part of the painful part of the pandemic is now behind us. How is this going to play out for the auto sector? Are you concerned? Because by the time there is a capacity pickup or capacity moves to the auto sector, it's still going to take a few months down the line. Keeping that in mind, how would you approach the auto sector in India?
Yeah, so I think it's clearly been the whole issue around autos and obviously auto companies accessing semiconductors has been well discussed, and I would argue well discounted into a lot of the auto names. I mean, clearly earlier in the pandemic, auto companies, when they saw a collapse in demand, they basically told semiconductor companies, we don't need so much supply. And the semiconductor companies were seeing a boom from consumer electronics companies, and obviously diverted that supply. And hence, we're at the problem today where, semiconductor companies are maxed out on production, and auto companies can't get back the supply that they gave up. I think the point to note is we are seeing early signs in quite a substantial pickup in production in certain of the semiconductor areas. So I think, as usual, high prices, one way or another, do beget new supply. So I would think we're probably most of the way through this particular crisis. Yes, I think we've obviously got a few months to go. There's no doubt about that. And some individual automakers are more impacted than others. For example, if you look across the globe at Toyota, they have a huge stockpile and always have kept a huge stockpile of semiconductors, so they've not had an issue at all. But obviously, if you look at other auto manufacturers, they've had huge issues who haven't been because they haven't been holding so much inventory. But I would say on the whole, that problem is probably, the worst of that problem is past us. Okay. And I think interestingly, if you look in the US, where that problem in particular, it caused second-hand car prices to go through the roof, we're already seeing quite a big correction in second-hand car prices. So supply is beginning to come back on stream. Yes, it'll be disrupted for some time longer, but I think we've probably seen the worst of it. So from an Indian perspective, if you look at a Tata Motors, for example, obviously their European operations with Jaguar Land Rover probably still will have some more disruption to go. Whereas, obviously a Maruti that's that company. The supply issues around there, I think, aren't quite so intense. So obviously, we did see a collapse in demand that has been recovering slowly. But I think that the sector in India still is, from the latest data I've seen, we haven't seen a massive rebound in demand just yet. But I guess that probably will be around the corner.
Right. Jonathan, we're also getting signs of stress, especially in the retail book in banks such as HDFC, Kotak, or even ICICI Bank for that matter, on one hand. On the other hand, you really can't ignore the uptick the banks are reported in the last quarter on the retail book. How do you approach that space? And within banks as well, would you prefer the corporate-facing banks? Would you like retail-focused banks? What about other financial institutions? How does that space look? And particularly, what part of the puzzle are you working with?
So I think when foreign investors look at India, one of the most exciting sectors has been and remains the financial sector.
Yeah.
It's a huge sector, as you point out. You've got private sector banks, corporate banks, retail-focused banks, public sector banks, and then you obviously move on to the other spaces which cater to different segments of the consumer market. So it's a huge sector, and a sector with really good structural growth drivers around it. And of course, now we've got disruptors coming in, the fintech plays coming in to try and disrupt. Traditionally, the way that I've always looked at Indian in the sector is we've tended to shy away from the public sector space for many, many years, and focus. I guess, as you rightly point out, the trade has generally been on the banking side. Do you want to be in the private, in the consumer-focused private banks or the corporate private banks? And I think, as you rightly point out, with the stresses that we're seeing due to COVID at a retail level, the corporate guys are doing a little bit better at the moment, because it looks like corporate India has coped better with the crisis. Whereas I think at the retail level, there's probably a bit more pain to go. So certainly, in the short term, yes, the corporate banks probably look better positioned. But I think, when you do look slightly longer term, obviously even the corporate banks have been pushing aggressively into the retail space themselves. ICICI yourselves, and many of the other corporate banks have also now got substantially larger retail books than they did 5-10 years ago. So it's a space which offers a lot of returns, but yes, in the short term, I think there is risk. But again, looking at the space, when you've got a bank that's well managed with a clearly defined strategy, with a good product offering, a broad product offering, particularly electronic offering that a lot of the banks have, and then looking at their credit card businesses as well. So I remain still very happy with some of the larger consumer-based private banks, but also in the portfolios that we look after, we do have a mix of both the corporate banks and the consumer-focused banks. And then on top of that, obviously, you've got the mortgage-facing businesses and other consumer-facing businesses, which reaches segments of the population which the mainline banks haven't been that successful with traditionally. And there's some very interesting businesses there disrupting the space there as well. So it's a huge space, and one that certainly, whenever I speak to foreign investors, I always recommend, that is a space you need to be structurally overweight on. And that there are so many different sectors and ways to play it. So it's a fascinating portion of the market, and one I think that is from an Indian perspective, very strong story for foreign investors.
Talking about those banks, you did say you like some of those private sector banks. Are we talking frontline private sector banks in HDFC, Kotak, and ICICI Bank? Or are you looking at the smaller tier 2 private sector banks? And also SBI, I mean, this story has been waiting to explode for years now, right? Again, it is showing some signs of strength, of signs of structural change. Would you buy an SBI, or would you stick with the private frontline names?
So I think, yeah, we don't own and haven't, we do review SBI. I think, it comes back to your comment right at the beginning of this interview about China and the regulatory risk. For us, SBI is of the pack, of the public sector pack, clearly, the best positioned and best managed bank in the group, and obviously the largest and the best capitalized. But the issue again comes back to government policy. Will SBI at some stage in the future be forced to consolidate the sector a bit more? And that's all distractions and something that I think outside investors can look at and think actually they don't need that. But down the tracks, maybe government will impose that SBI does have to consolidate more of the public sector names that are still out there, because we all know there's a lot of public sector banks still there and a lot of smaller subpar players that probably do need consolidating. So the issue for us, there should always be a risk, a discount you need to apply to SBI vis-a-vis the private sector banks because of that. But it does certainly have advantages, SBI, but at the moment the sort of risk reward for us means we would still stay focused on the private sector names, the larger ones at that.
Right. Jonathan, the recent flurry of internet IPOs are an indication of a structural shift, some people believe. Zomato, Policy Bazar, I mean, these are some of the names that the market's been talking about in the recent few weeks. It is a strong lineup of internet companies which are slated to have IPOs this year. In your experience, are valuations a fair way or parameter to judge these companies?
Yeah, look, I think so. First of all, I think it is really good news that these companies are listing in India. Somewhat frustrating for some foreign investors if they haven't got a license to get access to some of these stocks. But the reality is, India's been crying out for some time to have more, a broadening of the names in the whole space. So I think, first of all, that's really good news for India. Valuations of these stocks is always quite a difficult game. Obviously, there's a bit more history in some of the US names, and some of the valuations there are, eye-watering, quite frankly, particularly in some of the new names. That said, when you look at some of the Indian names that have recently come to market, the potential growth that these names do offer is fantastic. Of course, you can't discount the competition there, and that's always something you have to factor in. But I think, two things are favoring higher valuations. It's first of all, it's the growth. And secondly, still the rarity value. Yes, more names have started listing in India, but the reality is when you look at the number of names you can still invest in India versus, for example, other markets, right. It means the valuations are driven up slightly higher than they perhaps would be elsewhere because there's just not that much choice. It's getting better, but it's still fairly limited. So I think, again, an investor has to do their work on each individual name. There is fantastic growth opportunities that are being offered by these companies. But also, I think more than any other part of the market, competition is brutal. And you need to understand the sort of competitive moats that each company can offer you as an investor so that you're sure that the business is sustainable going forward and that the growth that we can all see is there is actually harvested by the company in question.
Jonathan, so would you pick up Zomato?
Yeah, I think I think I would. I did a little bit of work on that, a couple of weeks back, at the right valuation point, and when I was looking at it last, it was at a level that I think I would certainly consider. I think it has a fantastic growth opportunity ahead. So I think again, when we tend to look at stocks, we do genuinely take a longer term view, at least 3 to 5 years, if not longer. And on that basis, I think the company does have a good competitive position. the growth is there, and therefore, yes, the valuation looks a bit pricey in the short term, but anybody looking slightly longer term, we're very happy with the valuation point.
What about Policy Bazaar, or rather, have you spotted any of the wealth creating ideas among the IPOs that have been launched or are in the pipeline right now? Any specific names, Policy Bazaar, anything else that's on your radar right now?
No, I'm afraid the one I've just focused on more recently has been Zomato, but I haven't had time to dwell and delve down into some of the other ones that are either listing or imminently being listed or actually have just been listed. So it's a sector that certainly I'm going to be doing more work on, but at the moment that's I need to be doing a bit more on that.
And Jonathan, let's talk about the telecom sector, right? On one hand, the sector is grappling, or rather has been grappling, with a lot of AGR dues, and there is a tussle between the Department of Telecom, the government, and the incumbents. On the other hand, some believe that the worst is behind a lot of the telecom players. I mean, look at Bharti Airtel, for example. Their earnings are healthy. They've been reporting quarter on quarter improved growth. And that, of course, is the silver lining there. Any of these telecom majors you would be buying, a Bharti, case in point, would that be a stock you'd like to own or already own?
Yeah, so we've liked Bharti for some time, so we do have a position there. I think obviously the two larger players have been benefiting certainly from the issues at Vodafone Idea. Whether that's now turned the corner with some of the more recent announcements, we'll have to wait and see. But clearly, both the larger players have been gaining market share from the issues around that. And obviously, the Bhartis and Jio have been adding on services and increasing the offering to their clients and consumers. And it's a sector which we do still like. It is maturing, that's for sure. So the growth rates probably will start, petering out from here. But the point is, they're offering more services to suppliers. It's getting into a duopoly position, so it's getting a bit more stable. But yes, we do, as I said, we do like the sector. We do have some, focus on Bharti at the moment.
Jonathan, back here in India, there's a lot of talk about a recovery around the corner for real estate. And you look at some of those earnings, case in point, Ajmera Realty, they reported last week. Very, very strong quarter, top line, profitability, improvement on the debt. These companies are showing promise. Do you feel like there is hope for this sector to turn around? Do you think a lot of money will now once again start flowing into the real estate sector? Do you think it could be change, a structural change for the space?
Yeah, we've been waiting a long time for a broad-based recovery in the sector, haven't we? The trouble with real estate is it's such a local business. Pan-Indian real estate, there isn't really such a thing. Each city has a different real estate market on its own. So again, when you look at different names, some of them will be strong in the south, or certain cities in the south, others in Mumbai, others elsewhere. So again, it's understanding the dynamics in each individual market, and then within the actual stocks themselves, which segment of the market they're focused on, and then let alone whether it's commercial, residential, high-end, mass market, etc., etc. So it is a broad sector. There are a lot of different segments within the sector. I think clearly, the companies that have been exposed to high-end Mumbai have been struggling for many years. And it comes back down to affordability, it comes back down to what's going on with interest rates within the country, affordability, etc., etc. And on some of those metrics, we are seeing improvements. There's no doubt about it, affordability and some of the other metrics.
Any specific real estate stocks in your portfolio? A DLF, a Prestige, Omax, Ajmera, like I said.
Yeah, we've been quite conservative on the names. In the last, I guess the last two, there's nothing at the moment, but the last two we've owned would be a Godrej and an Oberoi. So very specific stories around both of those particular particular companies. One of the things we try and look at when we do buy companies, part of our process is to understand, very strongly what's going on from a corporate governance perspective within the individual companies. At the end of the day, foreign investors and a lot of investors in India are minority investors. And it's very important to understand what the majority shareholder is doing and how they view minority investors. So we tend to gravitate towards companies with historically very good corporate governance standards. And again, the real estate sector, there are some very good ones, but there's also some companies that we wouldn't be looking at, if I'm honest, because of corporate governance issues.
Very lastly, Jonathan, do you think it's now time for investors in India to be cautious, considering the outperformance of the mid-cap and the small-cap space of the large-cap index? Looming talks or concerns about the Delta variant or potentially a third variant of the COVID pandemic. And also, there are talks that the Federal Reserve may start tapering its bond purchases sooner than expected. So keeping that in mind, what should investors be doing now?
Yeah, I think clearly when you look at Indian indices, and obviously we're pushing to almost daily new highs, there are risks still in the global economy. There's no doubt about that. And one of the larger risks, yes, you mentioned the Delta variant. We're going to have to live with COVID one way or the other. So, there will be shocks from time to time. There's no doubt going to be new variants coming around all the time. So I think we're just going to have to live with that. I'm not sure that would cause a new variant would cause a massive sell-off, because I don't think the globe is at a stage now where it's going to go back into a significant lockdown. I think a lot of the major economies have decided they need to keep open and keep vaccinating. So that's one risk which will be there. We're going to have to live with it. I think, as you rightly point out, probably the biggest risk for markets is a liquidity risk, which is, you pointed out about the Fed tapering as such. And certainly that stock markets do like excess liquidity. It does drive, that liquidity, some of it does find its way into stock markets. And a lot of the data that we're seeing in the short term looks like liquidity is tightening. So there is a risk that potentially, that this new liquidity that's been finding itself into markets does start to stop or slow down, shall we say. So, yeah, in the short term, there are risks out there. I think probably if investors have made good, solid short-term profits, it wouldn't be remiss to lock a bit of profit in. But I think for long-term investors, you'll be fine. But in the short term, probably, we're approaching a point where a correction is conceivable.
Right. Thank you very much, Jonathan, for talking to us today on the show. With that, we're completely out of time. Thank you for watching. You can now, remember, make investments across major global markets with ICICI Direct. ICICI Direct Global Account now provides access to market opportunities in the UK, Japan, Hong Kong, Germany, Singapore, apart from the USA. Thank you.